Good morning, dear investors. Welcome back to our channel, and we are diving deep today to the world of finance and exploring exciting investment opportunities. I'm very glad you decided to pop in, and today we are turning our attention to a company that has been making real zigzag in terms of the emotions that has dragged of investors in the electric vehicle industry, as after very hyped 2021 Xpeng motors, that's what we're gonna talk about today, have right now been making a kind of a surprising moves, and that's why I wanted to just discuss this over with you. So Xpeng Motors, that's a prominent player in the electric vehicle sector that has recently released its earnings report, and we are here to break down the numbers and discuss what it means for potential investors. And as the world shifts towards sustainable transportation solutions, Xpeng has positioned itself as a key player in its transformative industry, not talking only about those car delivery, electric vehicle car delivery food, but about something a little bit more evolutionary. So without any further ado, let's head on to our first element of today's presentation. So what's next for the stock of Xpeng? As a reminder, we are live, so if you have any questions right now, you may pop it and I will get back to them as soon as possible. All right, so let's right now face the revenue breakdown. So we are after earnings, and we have the what I call the revenue octopus. So we can find right here what comes from and what leads to the revenue. So we have 92.5% vehicle sales, services and others. There are 7.5% and other revenue. That's more or less just hundreds of bucks, so I don't wanna discuss this over. Revenue also goes to the operating income, total operating expense. So there is research development out there with 43.9% and to COGS. So what I wanted to point out is this: after this earnings report, we've known that there is a wider than expected loss and negative gross margin that is raising concerns. So gross margin still is on the decline, this time of 2.7%. So yes, it was an improvement from 3.9% in the previous quarter, but still negative gross margins, obviously a bit worrisome here for investors, and also it's struggling with increased competition, as we were just finding out. There is, for instance, Tesla that is dominating the EV space, and that's one that is bringing a newer vehicles within that space with even slashing prices. That's why the Xpeng is the one that is a laggard, and this wider than expected loss has brought the Xpeng governors to find out the new ways to increase its product sales, and we'll possibly find out the new revelations in 2024. But when it comes to the most important elements of 2023 that really thrown a light on this revenue breakdown, there was a Volkswagen corporation that was announced back in July of this year with its investment of 700 million in Xpeng for purchasing 5% stake of the company. The Volkswagen is collaborating right now with Xpeng to develop two Volkswagen brand electric models, and that may eventually not only throw the light of this revenue stream this year, but also next. And the other thing that also happened in 2023 that also was very, very important was this cooperation with Didi. And that's what we also talk in a moment. So this corporation has faced challenges at first, but right after then, the investors started to recoup its prior reputation, and also the investors' buying pressure has been found. When it comes to earnings overall, we can find right here that we achieved a positive free cash flow with over 1 billion RMB in cash inflow. So we are confident of setting a new record for vehicle deliveries in the fourth quarter. For this company, the target for them is 6 million units, 60,000 regarding product sales. The G6 electric SUV has become the top-selling vehicle, the RMB 250,000 price range during its first quarter of the market. So the cost reduction was made possible through advancement in technology and engineering, and in October, they delivered 4,000 units of G9, making it one of the top-selling electric SUVs in the RMB 300,000 price segment. But with all that being said, we can find right now the black and white that revenue right now is rebounding, but EBITDA is falling down. So what it means that the earnings before all of these expenses right now is falling down. So revenue, due to lowering costs, has improved, maybe due to some of the improval in terms of the economic circumstances, but right now it's still too early to say that the company is right now on the right path to become this turmoil engulfing type of a pattern. So what I do find is that those problems inside of the company that stems from the competition, among others, are closely knit. In terms of the other things versus history, when it comes to income statements, we can find that the most worrisome right now and the most stark warning elements are this net margin and the gross margin. That's what we already discussed, and return on asset. So that's what many of the hedge funds are looking at, and we cannot really skirt this one and to really exclude from being a very important metrics to study that may eventually impede its further growth. Right now we are flirting with the situation that those metrics are not really improved along the 1.5 year, and that may cause a ripple effect on the interest in the stock. Right now we are jumping to the next element. Let's find out about the other elements of income statements, and quickly let's scroll through what are posing the biggest risks and may really have some reverberations on the financial runways. So right here you can find that funds from operations are deteriorating. So it means that we are shrinking with that funds, and that may eventually put the company into debt. Capital expenditures also, even though it has improved a little right now at the negativity. Cash from operating activities overall are slumping. So it means that that's another thing to find that there is not giving a run for its money, and there is no denying that may eventually reflect the lowering tendency on the stock valuation in the long run. Right now, even though we have delivered over 40,000 vehicles in quarter 3, 72% increase in quarter over quarter, and expecting even higher numbers, we can find that those data that are laying underneath may bring a little bit less, maybe a little bit less immersive for EV investors than when studied NEO company income statements or Tesla's. Of course, right now, among the most important elements that I wanted to just point out of these statements is that the company is announced to launch a new EV brand that is Mona in 2024, targeting a lower price range around RMB 150 and 150,000, of course, and that may eventually bring some confidence of gaining considerable market share in 2024 with this more rapid sales growth with this move. So that may eventually lend credence to this position. Right now, however, there is nothing really aside of it that holds a pivotal role in increasing the significance of the company among the EV industry. Right now, let's have a look at the future. So right now we are just struggling with lowering earnings, improving revenue, but in 2024 it's what expected in the second quarter, and till the 2025 we'll have some critical improvement due to what the market is right now finding, and that excessively optimistic outlook may eventually reflect the price valuation that may push the stock to the levels that have been kind of recouping the prior highs. In terms of other metrics, let's find out at where the market is evaluating the company to be traded in a year from now. It should flirt with this level of where we are sitting right now, and that's referring to around 17 to 20 bucks. So it means that at the best case scenario, you cannot lose on Xpeng investment, but that's what definitely you don't want to see right there. So from investment, you wanted to multiply your portfolio, not really persist it and preserve it along the time. So there is still many things in metrics of Xpeng yet to catch up with in order to just boost those projections even higher. And what about the company versus its peers right now in terms of studying of insurance trend in 2023? We can find that right here. You can find Li Auto is one of the leading power, and Xpeng, however, is trying to catch up with it, and we can find that this is delivering us a more like a welcoming environment for finding out that the company should perform much better in the months to come. So Li Auto right now having around 10k units. Xpeng is revolving around just 5, whereas the NEO has dropped surprisingly. So thanks to this mutual trust and endeavors of the whole Xpeng team, these changes in terms of insurance trend are finding a reflection in those numbers. So that's what is building up right here. So Xpeng is slowly but surely tilting toward an optimism. But let's find out what about the macroeconomy. So right here you can find that inflation expectations climb this year as Fed hikes slow, and that's what may spoil the party. And with this inflationary gauges been risen, we may have another reason to hike from Fed. Right now, there are some speculation that Fed is already done with it, but these things are yet to be need to be justified. And even though those projections that we have reached the top in interest rates have been pretty vocal, we still need a confirmation of it. So the inflation and also interest rates will really have the reverberations on how the stock will eventually perform, whether it still serves a stark reminder that something bad is going on for the economy, and with this very high interest rate level, we may have a recessionary outcome eventually being raised to the high odds in terms of percentage points. So right now we are just stepping away and fading those type of a recessionary threats, but it doesn't mean we are out of the mark in terms of those concerns. So right now we are tiptoeing around this 4-5% in terms of inflationary gauges, and as long as we are far away from this inflationary target, we may have those threats being arised from time to time. However, when it comes to the shorter time frame, we have right here the seasonality of US 100, and Nasdaq shows that with the possible slump in November, we may have another leg forward for stocks, especially those that are really prone to this sentiment type of a gauges. So it may be a kind of a golden time ahead for not only the small type of growth stocks, but also for the whole index overall. So when it comes to technicals, let's find out right here. We can find that the timeline of sentiment is getting through 50, so it may eventually possibly give us another room to thrive. However, it may be also the traps. That's what I will talk about in a moment. So let's find out right here that XPEV is trying to get through this diagonal line, the diagonal line that will eventually possibly give us a room to thrive to $20 to recoup the prior highs and being built of on September. Right now, however, it looks like we are kind of in a rejective mode, and pushing the price lower below this line to tank it even down to 15.25 on a weekly. However, it looks like a bit more pesky. We have a real dark cloud cover candle, and what it means that the bears are right now in a greater control than the bulls are. So even though we have rebounded on a very nice piercing pattern, giving us some odds to stay away those spookily type of environment building down there after crossing 13.5. We are right now rejecting once again this level of 17.74, but that's very interesting point that we have found at, as we are right now kind of compressing the price. There are some bulls sitting right at 13 and some bears at 17, so it means that dominant power on the market should remain to the previous type of investors, and that should be the bears side. However, as we are right now in a positive in terms of sentiment season, we may have another dump right to this 13.50ish. So this should be like this, and then possibly move to this so long awaited $20. So that's my trajectory for now. If you are just looking for the right entrance, that might be this level to think of it. So that should work away somewhere and should confluence with the Black Friday, for instance. So this will be very interesting to watch. But let me know in the chat what you think of such of a play. All right, we are right now getting back to our presentation, and let me just switch to this options chain right now, pointing that maximum pain is sitting at 17. So after rejection of this $17, we can find that there is a max pain being exceeded, and that may eventually inflict a bit more pain on the market with the possible larger sell-off coming up. So the 17 with maturity date of 17th of November, we can find that with those bets being disappointed, we may have another slowdown on the market, especially after getting below the 16 bucks. That's what may send a shock waves. Right now, as a kind of a wrap up, I have final thoughts and Q&A. So if you have any questions right now, you may just pause it. So as a kind of a summarization, I wanted to just find out that Xpeng is still in a right position to soar, even though those data of earnings haven't been so promising. Right now, the Xpeng is managing to stay steady, but the company's financial performance is still poor, with revenues hardly covering the cost of goods sold. So the company right now is facing liquidity problems, possible with this income statements being deteriorated in terms of many metrics, and I'll be right now choosing if I'll be choosing between other options between, for instance, NIO, Tesla, and Xpeng, I wouldn't really stick by the Xpeng one. But there are still things to improve. Xpeng is much about the future type of a company. So if you're believing in the concept behind the stock, that might be a very good position to buy it right now, as right now it's not so overvalued. There is still some room to thrive based on what the future may come, as we have many of the type of AI robotics and other systems being introduced for the company. And what is consistently demonstrating right here is that the CEO of the Xpeng is a pretty visionary type of a guy. So it may be another Elon Musk in the next decade of 2030 and along the way. So what I wanted to say at the end is that you need to remain cautious in whatever type of a investment approach you take in each step in. So thank you very much for today's episode. As always, if you have enjoyed, hit this like button and subscribe to the channel if you're finding the content right here interesting. So see you soon at tomorrow.